From R.D. Smothers Wealth Management, this is The Retirement.
When you retire, if you want an exciting life, you need a boring investment strategy.
Matters.
If you enter into retirement without a plan for income, you're not retired, you're simply unemployed.
Podcast.
Hey, this is your host, Dale Smothers, and you're listening to the Retirement Matters Podcast. My hope is that you will find the information you need in every single show on how to do one of the three things: either saving more money more efficiently, planning better for your future where you can live in retirement worry-free, or my favorite, how you can live a happy and fulfilled life in this life you have been given. We know that your time is valuable and we appreciate you spending it listening to this episode of the Retirement Matters Podcast. On this episode of the Retirement Matters Podcast, we go into the SpaceX IPO, which is coming very soon. And we discuss why it would be different for you to buy this IPO than it would have been maybe in previous IPOs back in the 80s and 90s. Do not expect this IPO to do similar things to what, say, an IPO would have done on Apple or Amazon. And I think all of that just really revolves around the fundamentals of how IPOs work today. We go into a little bit of that on this show, but in short, I'll tell you here in the summary of the show that initial public offerings are not the initial offering of stock like they once used to be. A lot of accredited investors and venture capitalists have already had their stab at SpaceX, and my fear is that retailers will be left out to dry as they come to get table scraps from these companies. Let's go to this episode of the Retirement Matters Podcast. I hope you enjoy it, and I'll tell you, if you have any need of advice or any desire to chat with our team, we're always here to chat. We love that you follow the show. We love that you listen to the show. We would love to hear your thoughts about the show in a review. But ultimately, if anything that we say here sparks your interest and you would like a little bit more detail, give our team a call and we'll be happy to pick up the phone and chat with you about it today. All right, let's get to the show. Hope you enjoy this episode of the Retirement Matters Podcast. Good morning to you. I hope you're doing well and you're ready to start discussing all things retirement matters. This morning, we've got a show that is perfect for the time we are in, with major announcements coming to the stock market here over the next, I would say, 2 to 3 weeks. You're going to start to see a lot of talk about space, about companies that are planning to go to space, and one in particular that is set to hit the market, and a lot of people are saying it is the stock to buy. Today, I'm going to tell you why it may be wise to wait just a second before you decide to take the leap. Some things you may not know about that particular stock. If you know what I'm talking about, you know exactly what company I'm mentioning. If you don't, we're going to get into that today. We're also going to talk a little bit about why discipline in this marketplace we're in right now is important. We're going to talk a little bit about seasonal activity that we see in the summer most of the time throughout the market, and how you can prepare for the back end of the year as we're closing up the first half already. It seems as if we were just celebrating Christmas together and we're already halfway through the year. We're in the month of June. And I'm glad to be here with you. So let's get to the pause for positivity before we get started. As always, this is the part of the show where we really just stop and focus on something that's positive, whether it's a news segment or maybe it's just spreading some sort of story that I heard, and those stories become contagious. The more we see people impact other people's lives, the more we want to impact people's lives. And together, you and I are making this world a better place. But sometimes, happiness, or what I may call positivity, can come from the ordinary things as well. We talk about living happy here at RDS Wealth. That is a mantra of ours. Live happy. I tell my 10-year-old right now, he has the power. Andrew, you have the power to make people feel good. My 7-year-old is starting to grow into the understanding of what that means. And so Matthew and Andrew are getting this on a regular basis, that you have a superpower inside of you to be able to make people feel special about themselves. You should use that every chance you get. And speaking of the boys, I was able to spend some time with them this past week at the Demolition Derby here in Taylor County. where I am from. This is home to me, and our boys go to the Taylor County school system. We are fans of the Demolition Derby, and a lot of that really stems back to where in my earlier years, probably from 15 to about 21, I actually was racing demolition derbies with my father. It was something we enjoyed doing together, and those memories were pretty incredible. And so I'm sitting on the back of my dad's truck here watching the Demolition Derby and having a lot of memories come back. As always, whenever we go to these demolition derbies, we always talk about what we used to do, or we may grade the drivers and say what they should be doing. And it's always fun for us. My dad and I get to connect. Well, now my 10-year-old is hearing these stories, and he's thinking, hey, I may want to get involved. Andrew's wanting to maybe get involved. And Matthew's always been a big fan of demolition derbies. And, I started thinking about how we've had these memories over our life, my dad and I, and now it's my turn to get to make them with my boys. And one of the greatest mistakes I think we make in life is assuming that happiness lives somewhere in the future. You can't really live in yesterday. You certainly can't live for tomorrow. You've got to live for today. A lot of times we tell ourselves that we'll be happy when we get the promotion, or we buy the house, or maybe we're going to be happy when we lose weight, or we actually retire. We finally get everything figured out. The thing that we may want in the future is what we deem to be the key to happiness. And the problem is that when we arrive at one destination, we immediately create the next destination. Yesterday you would likely have been very happy to see the today you. Yet the today you may be looking for the tomorrow you. Now, I'm talking to you here from experience. I'm not preaching at all. Instead, I'm issuing a challenge to myself and asking you to go along with me this week to think about happiness as not being a destination at all, but instead I believe happiness can be found in today's conversations with a friend or with a family member. I think that happiness can be as simple as the laughter around the dinner table, the quiet moments that seem so ordinary while we're actually living in them. That is the key to your happiness. Life has a way of moving really fast if we're not careful, much faster than we could ever expect. The days feel so long, but the years feel so short. So this week, I'm going to ask you, and I'm going to challenge myself to do the same. Let's not rush through the day chasing tomorrow. Take a moment to appreciate where we are now, who you are with, what you're already doing, what you've already been given. I think of this as the way to say, be where your feet are. Because one day, you'll realize that we're in the good old days today. That's our pause for positivity this week. Let's pause. Let's be present, be where our feet are, and together impact those around us to make this world a better place. All right, we're going to go to a quick break. When we come back, we're going to jump into the newest initial public offering, IPO, that is about to hit the stock market and has everyone talking on Wall Street. And I'll tell you what I believe investors should know about this stock before they make the leap. Let's go to a quick break. We're coming back with more Retirement Matters right after this.
You're listening to the Retirement Matters Show with Dale Smothers. Dale is the founder and president of R.D. Smothers Wealth Management. We specialize in building retirement plans that allow you to walk away from the worry of running out of money. If you'd like to chat with a member of our team, you can do so absolutely free by calling 270-600-PLAN. That's 270-600-PLAN. Visit us online at rdswealth.com and be sure to sign up for our free weekly newsletter.
All right, welcome back to the show. Let's get into this new stock that is going to be on the marketplace here in the next, I'd say within the next 2 months for sure, maybe even sooner, as the IPO date has been set, but it is notorious for being moved a couple of times until it's finalized. But this particular stock is SpaceX, and SpaceX has been all over the news. You've probably saw it on your Facebook feed, your Instagram feed. You've probably even heard of it in mailers. I think I had a person call me and say that someone had mailed them a pamphlet of some kind saying, come learn about how to invest in SpaceX. Now, this particular IPO, again, IPO stands for Initial Public Offering. If you've never heard of that before, the initial public offering is when a company goes from being privately owned to publicly owned. A publicly owned company is a company in which stock is traded on an exchange of some kind. And the way it works is the creator of the business sells a portion of that business to the public, and then multiple people can own that business. That business is owned by thousands, if not hundreds of thousands of people, and ultimately they answer to a board of trustees. There are quarterly reports that are forced to be sent out to show if you're making money or not. And depending on those quarterly reports, shareholders will either sell some of their stock or buy stock from someone else who is selling. This is the stock market. I've just described to you what the stock market is. Now, when the initial public offering comes out of SpaceX, there are going to be a lot of people paying attention. And I'm going to tell you that Wall Street has a tendency to sell things at very high levels when excitement is as high as it is for a company like SpaceX. They overprice things and they'll sell them to you, making you think that you're getting a good deal. I've got to warn you that the idea that a company is a good company, thus the stock must be a good stock, is a fallacy. It's not accurate. Stock prices get inflated. Stock prices of really good companies can be too high for that particular company. And it's our job at RDS Wealth to know what the valuation should be according to the metrics, according to how much money they're making, according to how much money they expect to make over the next, say, year or two. And then from there, price that stock accordingly and decide, is it priced currently at a high multiple or a low multiple? Is it overvalued or is it undervalued? If it's undervalued, we buy it for the client. If it's overvalued, we sell it for the client. That's what we do for the clients we partner with. We're doing this on a regular basis. And I'm going to tell you that a company like SpaceX or Anthropic, which is another IPO that's set this year, or a company like OpenAI, which is another IPO that's set this year, those two revolve around artificial intelligence. The IPOs that are coming out this year are set to make records as public money flows into these companies, making them worth trillions of dollars and ultimately placing them at the top of some of the largest companies in the world. Now, I think that the company model itself, we'll use SpaceX as the example, the company model itself is incredible. And it's no doubt that they are decades ahead of their competition. But what I'm going to tell you about this IPO is that you must be disciplined here. Do not chase the dream of making millions overnight and expect that that happens with a company like SpaceX. This particular stock is going to be wildly volatile in the first, say, 2 to 3 months of this stock trading on normal exchanges. You are going to see the price of that stock all over the place. It's going to be very, very high, and it's going to be low compared to where it has been. This type of volatility, this whipsaw action that will take place in this particular name, is one that is going to make a lot of investors never want to be in the stock market again, because they're going to be sold a bill of goods by marketing corporations. These pamphlets you're getting in the mail, the Facebook ads that you're seeing on your screen, all it is built to do is get your attention and then ultimately take your money. And putting your money into a stock like this may be a good idea for some, and it may be the worst idea for others. This is why it's important for you to build a true retirement plan as opposed to just buying a basket of stocks and hoping that those stocks go higher. Now, I'm going to tell you, these stocks certainly could, and I've just named 3, but we'll focus in on, let's just focus in on SpaceX alone. This stock could clearly go higher right out of the gate. But what I expect to have happen is a frenzy of retail investors, institutional demand, and potentially even forced buying of these companies to be added to major indexes. And what would then follow after that, according to history, is a short-term sell-off as certain shareholders take their profit. And once the sales begin, people start rushing to the exits. Now it's a race to get out of this stock. Just like it was a race to get in, it could very easily turn into a race to get out. I want you to know that SpaceX alone, let's just use that one, lost over $4 billion last year. Lost over $4 billion. And it had hundreds of billions of dollars worth of revenue. But it still posted a loss of over $4 billion. And most of that loss was due to interest on its debt. So when you buy a company like SpaceX, know that you are buying a debt-laden, low to no free cash flow type of stock. And then know exactly how long you plan to own it. And don't be afraid to let it go if someone comes offering you way more than it's worth. You see, I'm afraid that it's going to be priced right out of the gate for a lot more than it's worth. And I'm going to tell you why I think that's the case when we come back from this short break. I'm going to tell you why a stock like SpaceX may not be quite as similar to buying a company like Amazon back in the 90s. Don't go anywhere. We're coming back with more Retirement Matters right after this.
Thank you for listening to Retirement Matters, presented by R.D. Smothers Wealth Management. If you'd like to speak with us, give us a call at 270-600-PLAN. And if you enjoy the information in this show and would like to hear more, you can access previous shows by searching for the Retirement Matters podcast on the podcast platform of your choice. We also produce a weekly newsletter. Receive it free to your email inbox by signing up online at rdswealth.com.
All right, welcome back to the show. You know, this show is built in a timely fashion. I want to talk about things that are relevant to you at the time in which you're hearing them, as opposed to a canned speech of some kind, which is typically what you hear on most financial talk shows. So we pride ourselves on being a little bit different in that respect. And right now, what's hot is the initial public offering of a company called SpaceX. SpaceX is going to be hitting the market here in the next little bit, and it is going to disrupt a lot of the market. We're going to talk in just a minute, maybe at the next section, about how money flows in and out of stocks and why a company like SpaceX may actually be a strain on the market temporarily. But what I want to talk to you about right now is how a company like SpaceX or Anthropic, which is a leader in the artificial intelligence build out, or a company like OpenAI, which owns ChatGPT, when they come to market for you to buy their stock, I don't want you to look at them as if you're getting in on the ground level of a business. You know, you may think, wow, this is my opportunity to invest in Jeff Bezos and Amazon back in the 90s. And that's just not the case. Now, I'm going to tell you, SpaceX in particular, we'll focus in on that one because it could be the first one to come to market in short order here. SpaceX is ran by a genius of a man. I think he has invented a lot that has changed the world. And he has also been pivotal in a lot of different things, both, you know, from the business perspective and the political perspective that has helped shape the world we live in today. But Elon Musk alone is not reason for you to just jump into this stock without understanding what it will do for you and your individual plan. Okay, so for just a minute, I want to lean into this idea that SpaceX and again, Anthropic or OpenAI are companies that are altogether fundamentally, structurally different than investing in a startup that you think is going to be something big someday. Let's take Amazon as a good example. Jeff Bezos, a revolutionary founder, launches a company in 1994 where he's selling books on the internet. And he realizes in very short order that he's going to need more money than he can actually raise himself. And so he begins to think about taking this company, Amazon, to the stock market and raising money from public investors, taking it public. And so he structures his company correctly. And in 1997, the company goes to the stock market and it booms. There were early investors who realized Amazon's going to be something pretty incredible. And the way that I can give this company money is by owning some stock. The IPO was a success. There was a lot of volatility to follow, but Amazon is one of the largest companies in the world at the present time. Now, we can tell the same type of story about a company like Apple, who, with Steve Jobs clearly saying he wanted a computer on the desk of every American in 1976. People thought he was crazy. He knew he needed a lot of money to make this thing happen. And in 1980, just 4 years after, he began to go to the markets for money. The IPO on December the 12th, 1980, would have been a really good IPO to have bought in on. This has paid off well had you have bought that. Even if you didn't know what that company was, all you got to do is ask Forrest Gump. He'll tell you.
Though he did take care of my Bubba Gump money, he got me invested in some kind of fruit company. And so then I got a call from him saying, we don't have to worry about money no more. And I said, that's good. One less thing. Now, Mama said there's only so much fortune a man really needs, and the rest is just for showing off.
There it is. So had you have just invested in this fruit company back in the 80s, you never had to go back to work again. Here's the biggest thing. The IPOs of today are not quite like that. And there's one very important reason as to why. Take a guess, if you will, on when SpaceX was created. I'll give you a second here. When do you think SpaceX was created? It's going public sometime in 2026. That's been made evident. And based off of what you just heard and what normally IPOs do is they create the business and then they realize they need a little more money to accomplish their big vision, so they go public relatively soon. When do you think SpaceX was founded? All right, SpaceX was founded in 2002. 2002. And since that time, not only have you had one of the richest men in the world founding the company and then funding the company, you have had venture capitalists who are essentially very wealthy individuals buying shares of this company, giving money to this company as an investment for many, many years, 24 years to be exact. So this company has theoretically been in existence for, let's just say, 24 years, having taken extreme amounts of money, still losing $4 billion. And I'll give them a little bit of the benefit of the doubt because space is something that's very, very expensive to explore, and he's got big dreams. But what I'm going to tell you is that a lot of the short-term money that has potential to be made in IPOs has likely already been made. Imagine buying Amazon 24 years later. Is there still potential for growth? Of course there is. But is it going to be the type of growth that you would have seen had you gotten in on the ground level? Most likely not. And so this idea that SpaceX is going to be your next ticket to making millions, or, I've had a couple of people text me, and I think halfway jokingly saying, okay, let's cash out our IRA and buy SpaceX. And clearly, that's not good advice at all, because you're going to see this particular stock have a ton of volatility. And for most of the clients we work with, volatility is not something they're very comfortable with. They like it on the way up. They like making that money. But on the way down, they end up selling. And this is my fear, is that people are going to see the money making money, and then all of a sudden they're going to blink once or twice and realize that particular stock is getting sold off, and they're going to sell much lower than where they purchased it. So be careful. Be careful here. Here's my story. First of all, we are not chasing the IPO price for most of our clients. You need to be excited about these companies, but you've got to be disciplined about at which price you pay for these companies. Because in investing, and especially in retirement investing, a good company out in the world can be a very disappointing investment if you buy it at the wrong time and at the wrong valuation. So be careful, be disciplined, stay prudent, And call us if you need assistance. 270-600-PLAN. We would love an opportunity to review your overall plan, and I can tell you we will not buy someone's SpaceX just because it's the next hottest thing. Instead, we want to build the retirement plan that is right for you, helping you get to and through your retirement, even if it ends up being on Mars at some point in time. All right, let's go do a quick break. We're going to take a 30-second break here. We're coming back with one very important piece of information. If you are in retirement or approaching retirement right now, the market is at all-time highs. Be careful that we don't wait too long to start getting serious about the income phase of retirement, which is ultimately when you can walk away from work and know that you've got all the income you need to live the lifestyle you desire. We're going to talk about that whenever we come back right after this.
You're listening to the Retirement Matters Show with Dale Smothers. Dale is the founder and president of RD Smothers Wealth Management. We specialize in building retirement plans that allow you to walk away from the worry of running out of money. If you'd like to chat with a member of our team, you can do so absolutely free by calling 270-600-PLAN. That's 270-600-PLAN. Visit us online at rdswealth.com and be sure to sign up for our free weekly newsletter.
All right, welcome back to the show. Let's get into the S&P 500 as the metric for the overall market and tell you a little bit about what's going on right now. We are at all-time highs in the market. We consistently hit all-time high records. And historically, June is a pretty flat month for us in the market. June normally doesn't post many record-breaking months. It definitely doesn't show us much in loss historically. But I'm going to tell you, at the current valuations of where we are in the overall market, you need to be diligent about what you own and why you own it, and know that you are going to hold it through volatility, because I do think that we're going to see volatility this summer, in part because of gas prices, in part because of the ebbs and flows of the sentiment around AI and artificial intelligence spending. I think a lot of us get busy around the summer, and, investing maybe is the second or third thing on our mind. So the markets suffer from that. You've got IPOs that are going to come and demand capital, like we just talked about. SpaceX, Anthropic, ChatGPT, which is OpenAI, is going to demand capital from some other stock to buy that stock. So you're going to see some stocks that are going to take dips throughout this summer. And what you've got to know is why you own it, and know that you can hold it through that, or be prepared for that dip, and in preparation, go ahead and sell at high valuations. The idea around investing is very clear. Buy low, sell high. We are at high, and too many people wait until we get low before they sell. When we're in the lows, do not sell. If at all possible, buy. But we're at the highs right now. So do you need to sell some stock? Do you need to reposition your portfolio? Well, all of that depends on where you are in your own retirement journey. And I'm going to tell you, if you're over the age of 59 and a half, it's important that you begin looking at your own retirement income plan and understand what your portfolio needs to do and what it needs to target to accomplish your own desires. Your desires are going to look different than your neighbor's desires. Your desires are going to be entirely different than your coworker's desires. You have to make sure that you are taking advice on a personal level, not a cookie cutter approach, and that your advisor is not just putting you in a group of mutual funds and hoping they go up. Especially now that the S&P 500 is going to start to take on some of these companies like SpaceX IPO, the Anthropic IPO, and even the OpenAI IPO. Shortly after that IPO, a lot of these indexes are changing their rules to be able to include them in on their index. Now, I don't want to get into the weeds on that. First of all, we don't have a lot of time. Maybe we can make that a show next week on what that means. But what it's going to result in for you is more volatility in the index. We see this. And so the S&P 500 index is going to have volatility. And during those bouts of volatility, be sure you understand what you own and why you own it and what your desired outcome is for that portfolio. If you don't know that, if you can't understand that, or maybe your advisor's not actually looking at that in conjunction with Social Security, taxes, Medicare, and how all of this plays together, give our team a call. 270-600-PLAN. We can help you. We do this every single day. We help retirees cross that finish line with confidence, and we would love an opportunity to do that for you. All right, guys, just like that, we are through our show. I have enjoyed spending this time with you. I hope that I've shined some light on the SpaceX IPO, why it's different, why you should become disciplined in your approach towards investing in general, and especially after you cross the age of 59 and a half. Be very careful in understanding why you own what you own and what you need to be focusing in on over the next 5 years before retirement. Give our team a call if you need assistance in any of that, 270-600-PLAN. We would love an opportunity to talk to you. You can also navigate to our website, rdswealth.com, and on that website, you will find a place to have us call you at a time that's convenient. You can open up our calendar and put a time on our calendar for you to reach out, or for us to reach out to you, rather, and our team will be in touch with you to help you start your journey towards a retirement you've always imagined. Until we talk again, whether it's in person or it's right here on this same station, always remember, save money, plan well, and live happy in retirement. God bless.
Investing involves a risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. R.D. Smothers Wealth Management is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by R.D. Smothers Wealth Management.